Good evening, students. Am I audible?
Am I audible? Am I audible?
Hello. Join fast. So, students, write in the chat box if my audio, video, everything is clear. Okay, my audio, video is clear, right? So, today we are here for a special purpose. So, next 1 hour we are going to spend together on the subject accounting. So, subject accountancy, especially the students who are the beginners who have joined recently the class 11 commerce stream. And for them, I am conducting this class. So, if you are all of write in the chat box, that's my audio video is clear. Only one student is writing. Some other students, please write down. Yes, sir. If your audio video is everything fine, then I will share about the accounting subject. Accounting, recording of business transaction in the books of accounts. Business transactions. So this class is designed especially for class 11 commerce students who are very much beginners. Subject accounting teaches us how business transactions are recorded in the books of account, that is in journal and in the various subsidiary books, ledger. Moreover, preparation of trial balance, trading account, profit and loss account, and balance sheet. From the trial balance, therefore, accounting is a process in which various steps are to be followed, but recording of business transaction in the books of accounts are guided by certain principles and rules. Principles are concept, conventions, assumption, accounting standards. Moreover, for presentation of accounting information, various formats are prescribed, like journal has format, similarly ledger has format, cash book, trading account has format, profit and loss account has format, balance sheet also. Okay. So in this class, I am covering preparation of accounting equation by taking certain business transaction. The accounting equation, which is based on double entry system of bookkeeping, which is derived from dual aspect concept, an important one of the accounting principles. Before preparation of an accounting equation, let us first understand its meaning. With the progress of the classes, many more things you will be able to catch. Today, you must be learn the accounting equation formula and how it is drawn or prepared. So before that, so I will highlight briefly about the bookkeeping, meaning of bookkeeping, then accounting equations. I will explain you along with the illustration. So here I am sharing my screen. So all of you have joined. So audio, video is everything is okay. Now see, I am sharing my screen here. Just tell me that it's a visibility. First of all, we have to understand the meaning of bookkeeping. This is now tell me my screen is visible or not. Just write in the chat box. Yes, sir, it is clear. Okay, so clear, right? Now I will share this. So what is written here? Meaning of bookkeeping. What is bookkeeping? That is the recording of business transaction. What is saying here? Bookkeeping is that branch of knowledge which tell us how to keep record of financial transaction in a clear and systematic manner. So that means just I told you that the recording of business transactions are guided by principles, rules, and on that is the systematically transactions are recorded in the books of accounts. So books of accounts are journal, ledger, are the price subsidiary books are also there for recording the business transaction. Okay, so meaning of bookkeeping here, it is being defined as an art and science of recording business transaction in a systematic and chronological order. This is what is written chronological order in order of occurrence according to date wise. So first, suppose the transaction takes place on 1st June, then we have to record the 1st June, followed by 2nd June, followed by 3rd June. That is the date wise. Recording of the transaction date wise is chronological order. Systematic means there are certain rules, principles that we are to follow while recording business transaction in various books of accounts. Okay, and thereafter the need for bookkeeping. Sometimes you may get one question, 2 marks, state any 2 points for need for bookkeeping. So then from here you can write any 2 points here why bookkeeping is required. It is difficult to remember the various financial payments and receipts taking place during a period of time for recording of transaction is required. That is the bookkeeping. Okay, similarly, the second points, if you see, in modern form of business organization, the control of business, so bookkeeping records is required for controlling purposes and reporting to the owners. For reporting purposes, controlling purposes, bookkeeping transactions are recorded. That is the bookkeeping, keeping of the books of accounts. And one more need, you can see here, the financial information is required for the purpose of costing, budgeting, forecasting, and planning. So, with the progress of the classes, when you attend some more classes, so gradually you will able to catch all these points. So, controlling purpose, budgeting, planning, forecasting, this. Okay. And one more purpose, the bookkeeping records is required for income tax purpose, GST purpose, that is the taxation purpose here. It is given here. Point number 4, bookkeeping records are submitted to various government agency, means bookkeeping records are needed for income tax authorities, taxation purpose, GST purpose. This is your requirement. All right. So here. So next, I will show you this bookkeeping meaning. So you better you note down this meaning of bookkeeping, and then recording of transaction in the books of account. There are two system of recording transaction. One is called single entry system, another is called double entry system. Okay, here the system, that is the system of recording. How many systems are there? Two. Which are they are single entry system and double entry system. For single entry system, you have a separate chapter. So when the single entry system chapter we will start, then I will discuss their details about the single entry system. And today here we will discuss double entry system. So accounting based on double entry system here. Okay. So here now say, okay, students. So viewers, so please see that is audio, video is everything is okay, right? This now double entry system. According to this system, every transaction has two-fold aspects. That is, every debit must have a corresponding credit with an equal amount. So that is the debit and credit entry. So we all are learning under the double entry system of bookkeeping. Okay, and under this, the accounting equation is very important. So double entry system derive the accounting equation which is based on dual aspect concept principle. So above I already told you that the principles, and among them one of the important principle is a dual aspect concept, and that is on the basis of dual aspect concept double entry system is developed. Okay, this is the double entry system. So now if you get the question what is double entry system, then double entry, this is your answers, has two-fold aspect, that is every debit must have a corresponding credit with an equal amount. So this thing you will get more details in subsequent classes. Today I am covering basic concepts only, giving the information that you have to study in the accounting subject, accounting equation, journal, ledger. As the classes will be progress, so you will able to understand more and more things. Just you all of you for question here. Now I am taking the accounting equation. So how the accounting equation related with the double entry system. So this relationship I will try to establish with this double entry system, and accounting equation. So before that, you just understand the meaning of accounting equation. Here, accounting equation meaning given. Accounting equation is a relationship among the components of the balance sheet and balance sheet which states that every assets are always equal to the total of its capital and liabilities. This may be expressed in the form of equation, that is assets equal capital plus liabilities. Okay, now what is the assets? What is the meaning of capital? What is the meaning of liabilities? These are, again, I have explained you here. The terms assets. So what is the accounting equation formula? Assets equals capital plus liability, or in short form, A equals C plus L, capital plus liability. I hope you have understood this equation. A equals C plus L. Okay. Now assets. What is the meaning of assets? So simply, I will explain you here the briefly. So there are different types of assets: current asset, fixed assets, or non-current asset, fictitious asset. So that's I'm not going to discuss here. I will discuss in the subsequent classes. Now here only you try to understand the meaning of assets in accounting, meaning of capital in accounting, meaning of liabilities in accounting. Okay, in a simple sentence. What is written here? Here, assets are economic resources which are owned by a business and from which future economic benefits are expected to flow to the enterprise or business. So asset is economic resources which is used for earning of benefit, earning of income for enterprise. Okay, suppose that I have a one motor vehicle and I have given it on rent. That is, the motor vehicle is asset for me, and I am getting the rent. That is my benefit in income. So motor vehicle deriving benefit for me, then it becomes asset. Okay. So here similarly capital. What is the meaning? What is the meaning of capital? Here it is given. Capital, it is the amount invested by the proprietor. So the owner of the business is called proprietor, right? So this is the amount invested by the proprietor into business. It may be in cash or in kind. Kind means, suppose that I have started a business with 50,000 rupees capital. This is cash. And I have some furnitures. That furniture I also use for business purpose. That is in kind. Furniture brought into business in kind. That is my private property brought into business. It will be considered capital. Okay. So that is in kind. What is written here? In cash. So it is similar to that. It is that amount which is a man start with a man start with capital. A man started business with capital, investing rupees 50,000. So that is here, that capital. It is the amount invested by the proprietor into business. It may be in cash or in kind. Capital is increased with the amount of profit. When I able to make profit, my capital will increase. And it is a decrease with the amount of losses. And drawings. Drawings means some amount is withdrawn from business for personal purpose. That is a drawing. And when I withdraw money from business for personal purpose, it is a drawing, and it can also be stated using formula here: capital equal assets minus liability. That is the accounting equation. So here accounting equation, this one. Okay. Now liabilities, very important terms. Liabilities. So this, what is the liability? So it refers to an amount owing by one person to another. Suppose that if you have taken 1,000 rupees from your friend, and you promise that this 1000 rupees you will return to him. So that is a liability for you until you return that amount. So here it refers to an amount owing by one person to another person, payable in money or goods. So 1000 which I borrowed, I will repay you in cash, or I will give you goods, or I will works for you. That is services. In general, liabilities are financial obligation to outside parties arising from events that have already happened. Suppose that you have taken a loan from the bank for business purpose, so that loan amount is liability. Okay, it is payable outside parties here given this one outside. So banker is you have taken the loan for the purpose of business, and banker is outsider. You have taken and you promise that you have to pay this money. You will pay. This is the obligation. You must pay this amount. When you take the loan from the bank, you must pay this amount. That is obligation. And this obligation is a liability. So understood all of you that the amount which is borrowed and repayable, any amount which is payable by one person to another, that is the liability. Example, if you purchase goods on credit, so you purchase goods on credit, then the supplier is your amount payable to supplier, the person who supply goods to you, that is the credit, and it represent liabilities. So liabilities are different types: current liability, non-current liabilities. Later on I will discuss with you details in types of liabilities. Okay, and the next one is the drawings. Meaning is given here. Just we got the drawing meaning here. What is the drawing? So here I have written for drawing. You see what is the meaning of drawing? So this, it is an amount or benefit withdrawn by the owner from the business for personal or domestic use. So when the amount is withdrawn, suppose that I am doing a business, and in the business you know that there is a box where a businessman keeps money, and out of that box I have paid 1000 rupees to my son as tuition fees. That is it is my personal or domestic use, and it will be considered drawings. All right, so this way all of you note down in your copy and then learn the meaning. And business transaction, goods purchase, business transaction, goods sold, business transaction, salary paid, all the transaction which can be measured in terms of money. Okay, that is a business transaction. So meaning is given here. Say the meaning. What is business transaction? Why it is saying business? Yeah, business transaction. Any exchange, dealing of goods or services for cash on credit by the business with any other person is a business transaction. So if you purchase goods for sale, that is business transaction. If you have sold goods for cash, business transaction. Salary paid, business transaction. Rent paid, say business transaction. Wages paid, business transaction. So this is done for business purpose, and it can be measured in terms of money. Okay. So here transaction is an economic activity. So it is a measure in terms of money. Salary paid rupees 1000, goods purchased for rupees 1000 for resale, economic activity. Business and that change the value of some assets, liabilities or capital. So above accounting equation, if there is a profit, capital balance will be increased. If you borrow the money from the bank, liability balance will be increased, cash balance will be increased. So assets will increase. So these assets, liabilities, or capital changed. Okay, because of business transaction. All right. So now the accounting. Now I will take one simple illustration. That is the accounting equation. Especially this class is designed for accounting equation purpose. I'm sharing one accounting equation transaction. First, I will solve one accounting equation manually. Then again, I will explain you this accounting equations. Okay. Now look here on the screen. So is it visible to you all? Okay, I will check. So what I am sharing, is it visible to you all? Hello. Okay. Now say one, I will solve in front of you this transaction, and here what is given, accounting equations. So I am going to prepare accounting equation. Just now you got my equation, assets equal capital plus liabilities, and how transaction affect this accounting equation, that will be presented, this one. Okay, so see here what is given question. So it is visible, right? So you see what is written here, the question: show the effect of following transaction on the accounting equation. So what is the formula of accounting equation? It is assets equal capital plus liabilities. So now with these various business transactions, we are going to prepare accounting equation. So the first transaction I have taken here is started business with cash rupees 50,000. Suppose that you have started one business of any nature, any type, by investing rupees 50,000. So then how you will show this in accounting equation? How the double entry system, just you got the definition, every debit there is a corresponding credit with equal amount. So how it is affecting debit and credit, dual aspect concept. Again I will show you again that definition, debit and credit. So we are going to understand this debit and credit with the help of accounting equation, that is assets equal capital plus liabilities. And debit and credit terms, you will understand more details in journal entries when we start the journal entry. And I will start the journal entry. There also I will explain you about a debit and credit. Left hand side debit, right hand side credit, and it has no other meaning. Okay, later on I will come on that point. Now suppose that these are the business transaction, and this business transaction, with these business transactions we have to prepare the accounting equation. Okay, so number one I have taken here is started business with cash. Second point, transaction, purchase goods for cash rupees 15,000. Third transaction, purchased machinery for cash rupees 50,000. All right, so this machinery. Next, goods which is purchased here, 15,000 goods, it is just sold here. Goods sold for cash rupees 10,000, costing rupees 8,000. You understood this? That is, the cost price of the goods is 8,000, but it is sold at rupees 20,000. That is, there is a 2,000 rupees profit. So making 2,000 rupees profit, this 8,000 value of goods sold at rupees 10,000. Okay, then thereafter business rent paid in cash 1,000, and thereafter commission received rupees 2,000. So all these transactions one by one, using this each transactions, we will prepare accounting equation. Okay, now I will show you the solution, how it is prepared. Okay, now this is the format. Is it visible, the format? So this is the format you see here. So format is drawn. Well, here this is, see, this is the format. Okay, here what I will write, here I will write transaction. See, this is the format. So if you are sitting with pen and pencil copy, then you also better you write down. So first you draw the format. This you see here, transaction. You first write transaction. Then you here, this is the two line dividing. Okay. Above you write accounting equation formula. You remember accounting equation formula? Assets equals, so taking the gap. So this part I will use for assets, and after equal will be used for recording capital plus liability. What is the accounting equation formula? Assets equal capital plus liabilities. Okay, liabilities. Just now I explained you capital plus liabilities. Okay, this transaction. Now, first, what is the transaction I have shown you just now? This is the first transaction. So then you write down the transaction in transaction column first. You see, yeah, it started business with cash rupees 50,000. You see, I am writing here. Is it visible or not? I am writing here. You see, it started business with cash rupees 50,000. Same transaction you copy here. So this is the first. Now in business having dual aspect concept, double entry system, that is every debit there is a corresponding and credit with equal amount. So that is a business getting cash and proprietor has contributed capital. So this is the double entry. Two effect here. One is the cash effect, second is the capital effect. So every transaction has a two effect. Definitions you have seen. Definition. You have seen the definitions here. You see, uh, wait, I will show you the definitions. Okay, again, this is the given definitions here. Double entry. What is the given here? This is the double entry system. According to this system, every transaction has twofold aspect. That is, every debit must have a corresponding credit with an equal amounts. You remember this sentence. Okay. Using this sentence, we will solve this. You see multiple tasks. Okay. Now you see here. Now that definitions you have seen the double entry system of bookkeeping. Every debit there must be a corresponding credit with equal amount. So cash coming into, you see here. Here I have written cash. It is here capital after equal. That means that this portion I will use for writing asset, and this after equal portion I will use for writing capital plus liabilities. Okay, now you see that how this transaction used for making equation, accounting equation. This is the cash coming into business 50,000 and capital coming into business 50,000. So this you see that debit equal credit. So this every transaction has twofold aspect. This is with equal amount, here 50,000, here also 50,000. So this is the first transaction is over. Now take the second transaction. What is given the second transaction? See on the screen. So always you attend the class with pen pencil copy. Now second transaction you have to write purchase goods for cash. See, purchase, write down here, purchased goods for cash rupees 15,000. This is okay. Now how to put this transaction in accounting equation? Continue. So this when goods purchase, so you know that when goods purchase, goods is coming, cash is going. That means goods is a asset. So we do not write goods, we write stock. You see what I am writing? S stock. STOCK. Okay, you always practice this. All right. So when you purchase goods given in the question, you write stock. So then what is the value of goods purchased? 15,000. That means now you have in a business having cash balance 50,000. Out of 50,000, 15,000 gone for goods purchased. So that means here you have to minus in bracket. When you minus, you bracket. In bracket, you have to write 15,000. So, समझ में आ रहा है? So, goods purchase 15,000 and goods coming equal value worth 15,000. Here, that is a stock coming into business. So, one is coming, another is going. That is the twofold effect. Here, this is the twofold effect. So 15,000 gone from the cash balance and 15,000 value of goods coming into business. Okay, this is the one effect. This is the second effect. Now, this transaction does not affect capital balance. So you put zero. All right. After putting this zero, up this, now after giving the effect of this transaction, now you say what I am doing. Draw the line. Draw a line. Okay. Now, after this drawing, you write down here below this line, you write down a new equation. What is new equation? New equation. That means what is the balance? Find out the balance. After the first transaction, then second transaction. So, what is the effect of second transaction? That you show, give the effect and find ascertain the balance. So, 50,000 minus 15,000. It is 35,000 and 15,000 value of goods increased into business 15,000 and this as it is capital balance does not affect this transaction, so the capital balance will remain same as before 50,000. Okay, so this is the zero. Now this is the second transaction is over. Now take the third transaction. What is the third transaction given? Purchase machinery for cash. So write down here. Third transaction. Purchased machinery for cash. Rupees 10,000. Now you show the effect of this transaction in your existing accounting equation. So your existing accounting equation is how it is: cash balance 35,000, stock balance 15,000, capital balance 50,000. Now our third transaction, show the effect first. Impact of third transaction. So purchase machinery. Machinery is an asset. Okay, machinery, then one more asset increase, so a stock is asset, machinery is asset. Only difference is that a stock is current asset, machinery is a fixed assets. So now I'm right, you have to write here like machinery. Okay, machinery, one more assets coming into business. So when you purchase the machinery, cash balance decrease, so cash balance 10,000 minus. So this is the machinery purchase, not the goods purchase. So it will not affect the stock balance, zero. Then the new machinery came into business. So value of machinery came into business 10,000. And this transaction does not affect to your capital balance. So zero. Okay, those assets liabilities having, if it is not getting affected, so then you write zero. So now after giving the impact of the first third transaction, again you draw the line. See here I am drawing. Draw the line. Okay. Then again find out the balance. So that find out the balance. So that balance is a new equation. Again you write new equation. This new equation. This is the new accounting equation. So you have to write down this manner. New equation. Find out the balance. 35,000 minus 10,000. This is the bracket means minus. Okay. So 35,000 minus. So out of cash balance 35,000. Further machinery purchase 10,000. So cash going. So cash gone. So this is 25,000. Now stock balance not affected. So this is the 0. That means same value will appear 15,000. And the new asset came into business, that is the machinery, 10,000. Okay. And now 50,000 0. And so this transaction does not affect to capital balance. So it will appear as before, the value 50,000. 50,000. This is very simple, very easy. So just you practice. You need to practice. One to next transaction number 4. Goods sold for cash. Okay, transaction number 4. The goods purchase here. The out for point number 2. So you see what is written again. Write down that same transaction. Goods sold for cash. Right. Goods. So in this way, you can practice with me sitting in front of your mobile. Keep your copy, pen, pencil with you, and you write down. Good sold for cash. Or you just watch it, and after the class, you note down again. Again, you watch it. So good sold for cash rupees 10,000. सबको समझ में आ रहा है ना? वहाँ में क्या बोला हुआ है? Costing rupees 8,000. It means 8,000 का गुड्स 10,000 में बेचा, 2,000 रुपया प्रॉफिट. ओके. So the value of goods is 8,000, but it sold at rupees 10,000, making 2,000 profit. So here it is a triple effect. You see that. I will show you. The total goods sold. When you sold goods, cash is coming. So total cash coming into business 10,000. By selling of goods, 10,000 coming. So before that, this was going. When going, minus. When coming, plus. Okay. And now you say the value of goods is 8,000. So out of this is the goods stock. This is the stock value, 15,000. Out of the 15,000 balance, costing 8,000. So minus 8,000 value of goods sold. And this will not affect to machinery balance 0. But there is a profit. So if there is a profit, it will be added to capital. What is the profit amount? 2,000. Na? So 8,000 goods, 8,000 value of goods sold at rupees 10,000, so making 2,000 profit. So this is the, if there is a profit, it will be added to capital. If there is a loss, it will be deducted from the capital within bracket. That is the bracket. Okay. Now after giving impact of this transaction, again you have to draw line, find out the new equation. New equation. Okay. So now you see again, now you have to write new equation. This I am writing here, new equation. Okay. So new equation. So now already existing 25,000 cash balance. Existing cash balance 25,000 after the third transaction. So after the third transaction, the cash balance available is 25,000. In the fourth transaction, cash coming into business by selling of goods. So your cash balance is increased by 10,000. So 25,000 plus 10,000. कितना हुआ बेटा? 25 plus 10, 35,000. ठीक है? Okay. So early before this transaction, you have a stock balance, goods balance 15,000. So इसमें से 15,000 से 8,000 goods sold कर दिया. बचा कितना बेटा? 15,000 minus 8,000. 7,000 का goods बच गया. अभी भी है. So further it will be sold again later. Okay. So then machinery में तो कुछ effect नहीं है. So that machinery will be appear as same that before this transaction, that is 10,000. Same value is appearing. Okay. And now capital balance, the profit is to be added. So 50,000 plus 2,000, 52,000. All right. सबको समझ में आ रहा है ना? So this is, you see that every transaction has a twofold effect. That is a double entry system. And this again we will use for recording journal entry. Later on you will understand that one. So first you see that how double effect is shown. So, but sometimes it is getting a triple effect. So you see here, this transaction getting triple effect here. One assets, assets stock is also asset, and capital. This is capital 2000. So 2000 here added, 8,000 here deducted, 10,000 here added. So you see the one minimum two effect, maximum is 3, 4, 5, depends on the nature of transaction. Okay. Now, sorry. Now I am taking the transaction number 5. So what is given here? Transaction number 5. You see here, rent paid in cash rupees 1,000. So now write down again. Number 5, rent paid. दिखाई दे रहा है? Rent paid in cash rupees 1,000. So you all of you know that the cash, when rent paid, when salary paid, when wages paid, these are the recurring expenses which happens every month. Na? Rent we pay every month, salary we pay every month, wages we pay every month. So recurring. So a revenue expense. This is called also revenue. Okay, revenue expense. So if there are revenue expense, it is deductible from cash. So when rent paid in cash, so cash balance is a decrease by 1,000. So this is 1,000. And when a revenue expense, so this is the one effect. So every transaction must have a two effect. So second effect would be capital. So here plus, so it is a rent paid, it is a not good sold. So no effect on stock, no effect on machinery. So zero. Okay, if the particular asset is not getting affected, so then you put zero. So only here two effect. So here cash effect, capital effect. So when rent paid, it is a revenue expense. So in accounting equation, it is deducted from capital. So cash minus capital minus. This is, so you see that two effect. So every transactions having two effect. So here, so minimum at least double effect. Double effect, that is debit credit. Now draw the line. Again, write down the equation. New equation. Right. This is the new equation. Okay. So after new equation, you see again I'm writing here new equation. It is not visible. So you see that new equation. You see after every transaction, you have to find out the balance, stating new equation. After every transaction, you state it, new equations. Okay. So all of you like, subscribe the channel, the students. So all of you like and subscribe the channel if you have not subscribed. Now you see that 35,000 out of 35,000. Cash gone 1,000. What is the balance left now? 35 minus 1,000, 34,000, right? And plus. So this transaction does not affect stock. So same value will be appear 7,000 as before. And this transaction does not affect to machinery balance. So same balance before this transaction, that is just 10,000, 10,000. This transaction affecting capital. So I told you that if it is given in the question, rent paid, salary paid, wages paid, electricity bill paid, telephone expenses paid, carriage on purchase. So these all these expenses, many more expenses are there. These are the revenue. You have to identify revenue in nature. That is which happens regularly. So this type of expense, while preparing accounting equation, you deduct from cash balance if it is paid in cash, and deduct from capital, it represent loss. So 52,000 minus 1,000, what is the balance? 52,000 minus 1,000, what is the balance? 51,000. Okay, one more transaction. So this I'm taking here. What is the one more transaction? commission received. So then again write number 6, commission. Commission received rupees 2000. So when commission received, it is cash coming against commission. So that is cash balance is increasing. So cash plus, and it is a commission received, rent received, interest received, capital plus. It is a income. So when there is a income, capital will amount will be added to capital. When there is a expense, the amount will be deducted from capital. Okay, in one effect. And another effect is if it is paid in cash or if it is received in cash, so commission received cash. This is the cash. So cash amount is increased by 2000. So when you receive cash commission, means you receive cash, so 2000. And this transaction does not affect your stock balance, so zero. And even machinery balance does not getting affected, and but it is a received plus 2000, paid minus received plus. Okay, again you draw the line, find out the new equation. Again draw the line, find out the balance. That balance is your new equation. Again write down new equation. Okay, all right, so new equation. So 34,000 plus 2,000. How much? 34,000 plus 2,000, 36,000. So this transaction does not affect stock balance. So its old balance will be appear. So balance will remain same as it is. 10,000 as it is. But capital balance changed. 51,000 received income. 53,000. So this is how we prepare the accounting equation. Now, in every new equation, when you check, you will get the assets equal capital plus liability. So, every here, suppose that this is the new equation, you check it. So, 34,000 plus 7,000. Okay, I will show you that. You will get equal to 51,000. See here, what is the new equation? 34,000 plus 7,000. Okay, 34,000. I will show you in calculator. 34,000 plus 7,000 plus 10,000. How much you are getting? 51,000. See, okay? 51,000. And what is the capital balance? 51,000 is. So in every time, wherever you add this, whenever you find out the balance, so that is why assets equal capital plus liability. In these questions, the liabilities transactions are not taken, only assets and capital. Few transactions are taken. So in subsequent classes, I will take the liabilities transactions related also. Okay, so in every level, wherever you add it, you will get the assets equal liability. So this equal this. New equation. This equal this. New equation. This total equal this total. That is 35 plus 7. Your it is your 42 plus 10, 52,000. If you check the new equation, 25,000 plus 15,000 plus 10,000. So 25 plus 15, how much? 40,000 plus 10, 50,000. So that is why assets equal to capital plus liability. Liability is a zero. Here liability is a zero. All right. So this is how we prepare accounting equation. Okay. Now, very simple every time. See on this one. So this how we have prepare accounting equation. So all of you understood now how accounting equation is prepared. Now I will show you the similar five transaction in on screen. You see, this is in the same manner as it is prepared. So this one here. Suppose that here, this Anurag started business. First, you see the question. Show the effect of following transaction on accounting equation. Now, all of you have understood. I have shown them manually by solving by taking five six transaction. Now, in the same manners, you have to solve this. You see, I'm showing you this. Uh, Started business with cash rupees 10,000. So this accounting equation, and here it is written assets equal capital plus liabilities. Okay, have capital plus liabilities. So this is the assets, this is the capital, this is liability. Now accounting equation is to be drawn with the help of this business transaction. So Anurag is not here. Anurag started business with cash rupees 10,000. So this transaction is written here. You see, Anurag started business with cash rupees 10,000. So cash balance increase, capital balance increase. So this 10,000 is for uh, okay. I will shift it. It is showing with this. I will shift. Just I will make below the capital. Okay. Right, so then this will be below the capital bit. Space problem. Some net issues showing here. It becomes slow. Oh yeah, it is gone here. You see. Wait. Okay. Here you see some net issues. It is not taking effect. It is not moving. Yeah, this one. This. Wait. Well, so today it's having some issues. We will meet in the next class again. So today I'm concluding the session. Here some net issues it is showing. Well, viewers, so I'm concluding today's live stream having some net issues problem. So we will continue with a new topic and a new type of transaction in subsequent classes. So all of you subscribe the channel, click the bell icon. You will get the notification whenever I will come on live. Okay. So here I am ending the session. So all of you. So do the revision the class. Write down in your copy. Practice all of you. Bye bye. Good night. Jai Hind.